Welcome back. In this video, I will show you a bit behind the scenes on how I pick securities that are very interesting to trade. So first off, read this disclaimer carefully. So my primary strategy to find a good bearish or a bullish trade is to really have the odds in my favor. So what I do is that I just go through a bunch of charts, and then I either want to see that the bulls have made a big mistake or the bears have. The best thing for a bearish trade is not simply that the bears look at the chart and the other factors and say, oh, this is bearish. You also want the bulls to have a higher probability of turning bearish. So that is why I prefer to find securities that are either very overbought or very oversold. Alternatively, if there is a key support level, those are also interesting. But let's now go through some highly liquid securities to find opportunities. But the thing is that this method, the key thing about this video is the method itself. So don't get too hung up on the specific date this is recorded. This pattern is something you can always look for. So here I start on the top of the list. So these are securities where the option volume is pretty liquid. So you can get pretty fancy with these. They're very easy to get in and out. And yeah, just way more opportunities. And that liquidity is especially important if you get into the options market, because with something like, if you take the SPY is so liquid that the options market, even if you go pretty far out of the money, you can still trade them with the leverage and get a nice reaction to the underlying move. So if the S&P 500 goes up 1%, then you will see a corresponding move in the options due to the liquidity. If it's not liquid, then you don't get that effect, and then you need to be way closer to the strike price. So basically, yeah, it's all about liquidity, really. But yeah, when it comes to AI, this one, I don't, yeah, if we were here now, I might have considered a trade, but we already got a bounce, so I'm not a huge fan of buying right after the bounce. So let's go to Bank of America. What's the problem here with back? Yeah, so here is Bank of America. Yeah, we do potentially have a bit of a breakout in development. Let me just draw that in. That is interesting, but yeah, I'm not a huge fan of trading breakouts. Yeah, if you look here as an example, right, this is a previous time where you had a breakout in Bank of America. And yeah, you got a bit, but then you got a big correction as well. And then you got a major one. So I would much rather buy support before a breakout than to buy the breakout. Because with when you buy the support, then you get the move, of course, before the breakout. So the breakout move becomes like gravy for you. But if you just buy right at the breakout, then you know, you don't get anything that came before, of course. So yeah, not a huge fan of that. So Bank of America is not like on the list. So BITO is a Bitcoin ETF, so you might as well just look at Bitcoin. As a Bitcoin, it got, you know, ridiculously overbought. So this is a clear case of a trade where it was ridiculous on RSI, just begging for trouble, and now it got that trouble. So to turn bearish, right? When you have a crazy move like this, that makes a lot of sense, because one thing, the bears will be bearish. Of course, the bears are bearish. But what's even better is when the bulls are likely to turn bearish. Because if you are a bull, right, and you have a new big move, Bitcoin just made a new all-time high, what are you going to do? Number one thing, you have profits. That's a real profit. The Bitcoin bulls have gotten burnt before. So the bulls are then likely to also sell, not because they think Bitcoin is going to crash, but simply they have profits. They just want to take cash in those profits. Bulls bearish, and the bears are bearish. That's great. The opposite, right, is where you are here. When you are here, then you have the bulls are of course bullish because the bulls are bulls. What's even better around here is that if you are a bear, so you have shorted Bitcoin down here, you start to become spooked because you know that you have some nice profits. You have lost profits before as a bear, so you start to tighten your stops. So you get a very good situation where the bears also can turn into bulls. And that's a very good situation to be in if you are a bull. But yeah, when it comes to Bitcoin, so we do have a bearish move in development. It's just a pullback, but yeah, I'm not a huge fan of, like, if I didn't have a bearish position now, I wouldn't put it on now. It's not an ideal setup. I think that this was an interesting opportunity here where you had resistance at the 20-day moving average. That is where you can put on a bearish position with a tight stop loss around that zone. Let's look at box. This is box, yeah, nothing. Well, you do have the support at the purple 20-week moving average. Yeah. The 100-day moving average in blue is interesting, but we have recently cut a bit below it, so it's not something you can use as like a tight stop loss level. So yeah, this is just not an ideal time for box either. So here is P-body energy. Now, so the green 50-week moving average is it's interesting, but we recently sort of, if you look at where would you have to put your stop loss, you see how far below the 50-week we were here, so you would have to have like a 8% stop loss to use like the 50-week as your indicator. That's too much. Yeah, not interesting. It's the key thing, right, is that you want to put on trades where you can have a fairly tight stop loss, because even if your analytical skills in the stock market or any other financial market is quite bad, let's say that it's 50-50, so you're not good at all at picking good securities, if you do have setups where your stop loss can be fairly tight, then the few times where you do have a win, it's going to make up for a bunch of smaller losses. But if you have like wide stop loss, you can't have that many big losses then before it becomes very hard to make a profit in your overall account, right? Because if you have a 50% loss, then it takes 100% gain to get that back. So yeah. So here we have Cameco Corporation. So this one is a bit interesting. So I'm bullish on uranium long term. We do, however, see that, let me use the right color. It's had a bit of a habit of struggling after rallies. It has a bit of a habit of taking a break before another rally. So now we are at resistance here. Yeah, pretty clear zone of resistance. So in this case, I would consider maybe there's a bearish opportunity. Ooh, I would have to have a 7% stop loss level, which is a bit wide. Yeah. So this one, it's sort of interesting. Yeah. But I'm not a huge fan of the stop loss. What you could do is to put on like a credit spread in the options market where you benefit from time decay and you also get that capital efficiency. But yeah, let's move on. But this is the most interesting one so far. Next is Carnival Corporation. Yeah, there's not like a clear signal. No, just move on. Chewy. Okay, so Chewy, let's zoom in a bit. So when I look at the chart like this, I do start to become a bit bullish, right? A bit of a contrarian bull. Because we are definitively not at any risk, right, of buying Chewy at the highs. So you can check that off your list. Like, the risk of buying Chewy at the all-time high is not there. Okay, not a risk at all. But is this the low? Is this like a good time to get into Chewy and potentially get some big gains? Just going up here would be 58%. And that's way far away from the all-time highs. We do see some initial signs of a bottom forming. The only caveat is that when you look at the wicks, so here we have the wick, let me get to the other tool. If you look at this wick, it is higher than this wick, right? So I don't like that the wick here on the last weekly candlestick is lower. It shows us that there were bears further down, even though we did close higher. Yeah, but this one is it's a bit interesting. It just is. So let's explore this one a bit further. Let's look at the seasonality. So yeah, May, which is around the corner, is not a particularly bullish month, but June is really good. Yeah, July is not too shabby either. Here we have the fundamentals. So let's zoom in. Okay. So price book very low. Price to sales is at support. So that's interesting. PE also at a support-ish level. Same thing with price to free cash flow in purple. So this one is becoming more and more interesting. So I do think I have a candidate here for a trade, or actually maybe an investment. So the price targets very bullish. Minimum is 1% above us. Average is 44% above. So this one definitively looks to be undervalued. So let's look at the Chewy. Yeah, so it has a weak correlation with S&P 500, minus 36% short term, 26% with let's actually pick something that makes more sense. So let's I think it's called pause. No, pause set. Yeah, pet care ETF. Okay, let's look at the correlation. So short term 21% positive, long term 89%. Okay, interesting. Okay, so let's now compare Chewy with pause. Select that, and then we put pause here. So now I am comparing them against each other. So long term, yeah, Chewy has massively underperformed the pet care ETF. On dailies, yeah, pretty low, but not like extreme. Seasonality favors Chewy for June and July. Okay. So let's look here at pause alone. Seasonality, yeah, for June and July. So it's not the next month, but around the corner, it's bullish. Here we have the pause ETF. So yeah, in this case, I would actually settle on Chewy. So Chewy is an interesting investment. Here you can see some option indicators. Implied volatility is a bit elevated. Of course, if you are a long-term investor, you could just buy shares in Chewy, right? That's also definitively a possibility. Chewy doesn't pay a dividend as far as I can tell, so that's not like one of the risks you have. No, there's no dividend, so that could be a potential issue if you sell options. But definitively, if you want to get into the options market, you must always have limited risk, because it's just lunacy to go into those infinite risk trades. So yeah, I think this is interesting. I'm bullish on Chewy. Am I like an extreme bull? No, but if I were to put on a trade on Chewy, a long-term trade, like not with options, but with a stop loss. Yeah, I would put the stop loss at, yeah, let me put it at, yeah, 5.5%. So if we do, so that would basically use these two lows as like the low I want to see hold. Of course, you do have this wick here, which went lower. That would be a place where that trade would be stopped out, but you have to put your stops somewhere. That's the thing, and 5.5% stop loss level for this type of long-term-ish trade, it's not terrible. Ideally you would have it tighter, but in this case, Chewy is so far down. You have seasonality that is favorable, at least on the horizon. Fundamentals are promising. Relative performance is also not too shabby. Another thing that Chewy could benefit from, which is of course related to all of these factors, is rotations. Because if you look at other sectors, right, you have the S&P 500. Well, let's actually look at something more specific. Let's look at XLI. XLI is still, high. Let's look at Jets. Not too shabby on Jets. SMH, I think it's corrected. Now it's rallying again. So you do have some various elevated sectors where you might get some. Okay, this is an old signal. Yeah, so this is not an active trade, but it shows you how I do it in TradingView. So what I will do is that, okay, let me show you. I will put on like a price line, and then I will add some notes about what kind of what kind of trade it is, and then I will also put in a line when the option expiry happens, because then I know, right? So yeah, let's go into my notes. Mega trend. I think I have. Let me just check where do I have Chewy. Find and search. Find Chewy. Where is Chewy? Pet animal affection. Space exploration growth. Yeah, this is a mega trend. Yes. So Chewy, like that. So the key signal here is that horizontal support. Technicals, long term, I will give this an 8. However, the big caveat here is that if you lose support, right, that's bad. Obviously, that's bad. So it's all about that support level. Long term, I do feel bullish, especially given that the seasonality is promising on the horizon. So the seasonality for May was not spectacular, but June, July more interesting. So 6. Fundamentals is a 9. It is undervalued. Relative performance, I think I give it a 4. So we end up with a 6.8 here in favor of the bulls. So there's pretty good reason to be bullish here on Chewy. The big problem, right, with these types of trades like Chewy is that, when it doesn't work out, it really doesn't work out. But yeah, it's interesting. So the way I think I might express this trade. So what I think I might go into the options market, put on that vertical, and maybe go all the way out into July, where I do benefit from a bunch of time decay of the option. simultaneously, I do think that there's a pretty decent probability here of a rally. It's important to be aware that you have a lot of money in the stock market that just has to find a home, like mutual funds and other types of those types of actors. They can't like go like 100% into cash. So there will always be rotations. So even in like the worst bear market, you will have these rallies and rotations between sectors. Um, it's of course fully possible that Chewy could go to zero. There's been quite a few companies throughout history that have gone to zero, gone bankrupt. So that can happen. But yeah, I do think I will go into the options on this one. So options are very interesting because they are more capital efficient. When it comes to like a stop loss with options, like if I am a net buyer of options, where I am punished by time decay, then I will be very aggressive on my stop loss. Like I recently put on an out of the money. I just bought the put on gold, and I just cashed in my profits after one day of like a big move. So I had like a 64% gain overnight. You need to cash in those gains. As I'm very aggressive on stops when it comes to, and also cashing in profits when time decay is against me. When I have it in my favor, like with Chewy, I'm going to be more generous. I have all the way here into July, so yeah, I'm going into Chewy now. I'm going bullish on pet care. So yeah, I think the most important thing about this video is like the logic. Number one, find some security where the odds are stacked in your favor. So if you find something that looks interesting from a bullish perspective, then you need to check, are there other types of bulls? So in this case, right, we had a technical signal. Then I need to know, what about those who look at seasonality? Will they be bullish or bearish? We saw that those could be a bit bullish. Then we looked at the fundamentals, and they were definitively bullish. So those fundamental analysts who don't care at all about technicals, they will look at Chewy and be like, oh, this is value. And then you will get those, look at relative performance and rotations. They might be interesting in Chewy. And then you need to take the perspective of the bears. Like if you are short Chewy, so put yourself in the position, right? You are short Chewy, you have made money, but are you comfortable? Like when you look at what is happening now with the fundamentals, with the technicals, with all of these factors, I would feel very uncomfortable being a bear on Chewy at this point. And when the Chewy bears start to flip into bulls, that is when you get to like a real low. So yeah, to get more intel, you just go to DiamondArm.com and stay tuned for more. The focus forward with these videos will be more on the educational side. That is simply because the type of videos I have made where I've focus on like very timely trades, they age extremely poorly. They just do right, and I have gotten like various emails about people who are like they're happy with the content, but it's like if they saw the video 1 week too late, then the move already happened. So I will rather now forward. I will focus on cases, like on interesting opportunities, but explain the logic around it more, such that you can benefit from the video even if you look at the video like 1 year into the future. And that is what I want with this video, is that those who see it now and those who see it in the future can benefit from the logic of, okay, we want to find opportunities where the odds are stacked in our favor. And the more we have of that, then we can actually beat the market.